Welcome to the 10 Mil Club Standard Portfolio Meeting for the first week of June 2026.
From the South Carolina Low Country,
It's a 10 Mil Club. It's a 10 Mil Club.
Welcome to the 10 Mil Club's weekly portfolio meeting. What is the 10 Mil Club? The 10 Mil Club is a group of people, an informal group, who all believe that if we could get to $10 million of net wealth, we would have the financial freedom that we're looking for and so desire. This was a curious week. We started out with no better breadth than we have had in the past few months, I suppose. This is the percent of S&P 500 companies trading above their 200-day moving average. If you have at all been watching the market over the past few days, you know I'm just going to pull up SPYM. This is the S&P 500 ETF that we like to watch here more than anything else. You can see this is a year of it. Maybe we'll just go to 6 months of it. This is the run up. This is a cross of our trend line, and this is a run higher, and then that one day is Friday. We can actually see, so it's about, right now as I speak, it's about 9:31 p.m. Eastern time, and on Sunday night, June 7th, 2026. And let's go to a 1 day, 1 minute. So futures have started trading. This is Friday with its down, and then futures have started trading, and they seem to, since they opened, they opened Sunday night, I believe, 8 o'clock p.m., if I'm right. They've traded a little bit higher here. Here's where we are. So this is going into Monday. Basically what happened, if we go to the S&P 500 SPYM that we follow, we got a jobs report. The jobs report had a lot more job hiring, I guess you'd say. Now, interestingly, the employment rate didn't go down. I believe it stayed steady at 4.3%. But the jobs report had a lot more jobs that were filled than I think anyone really expected, which is interesting because year over year, like last year this time, the story was that if we hadn't had health care, we wouldn't have any job growth at all. Health care was pretty much propping the entire job market up. Now, what we have is a situation where jobs are actually being created. There's a lot that could be said about that. That could take a whole lot of time. We're seeing somewhat of a collision between implementation of AI and actual productivity gains from AI. There's a trend called token maxing. There's a whole lot of stuff that I would encourage you to read and get familiar with. But basically, I think there has been a narrative out there that interest rates are higher than they were before the raising of them in 2022. So all 2022, the Federal Reserve raised interest rates. And we'll call it the effective federal funds rate. That's what they really raised. And I think the yield curve inverted there for a little while and then kind of flattened there for a while. And I think the thinking was, well, they're going to have to lower rates because they won't stay this high. Or they aren't really high particularly. They're just higher than they were during a crisis era in 2020 and 2021. And I think the job report coming in hot on Friday simply gave the market a reason to believe that took any reason for rate cuts off the table. And we haven't had really great market breadth. What we've had is a small set of stocks, mostly in semiconductors and a certain area of tech, that have been pushing the S&P 500 up. And there hasn't been this top to bottom or even deep participation in the S&P 500. And so with rate cuts off the table, all of that tech stuff, now you would think, I believe, even President Trump posted the job market report came in good, the stock should be going up, not down. Well, if you watched Dave Keller on Friday evening, he made a statement, and this isn't the first time I've actually heard it, he reminded me of it. What's good for the economy isn't always good for the market. And this is a case of it, because the chain reaction of thinking goes like this. If the job market's hot and oil prices are still high, then there's no reason for the Federal Reserve to cut rates. With rate cuts off the table, then tech companies, which depend on a lot of debt in order to create their projects, and those returns are far out in the future, all of a sudden there's a lot of duration, like equity duration on them, and so rate cuts off the table, all of a sudden those stocks get priced down, and with those stocks being an outsized amount of the recent movement of the S&P 500, down things went. And here at the TMC, we actually own a position in one of the most crowded trades there are, which is the semiconductor trade. So we'll go over that in just a minute. And we got punished on our holding. Luckily, it's only so much of our portfolio. But the S&P 500 just took a beating on Friday, and that's what happened, is that rate cuts are now not on the table, and that may be a good indicator of the strength of an economy, but it's bad for stocks in general, at least in the short term. And that's the punishment that we took. Interestingly, this is the percentage of stocks that are over their of S&P 500 companies that are trading above their 200-day moving average. Oddly, on Friday, that closed higher than it opened. Now, the trend has been down, but for the day anyway, it closed higher than it opened. The percentage of S&P 500 companies trading above their 50-day moving average, however, closed lower. So there's that. Just to make a point of it, 54% of companies trading above their 50-day moving average really isn't strong breadth. It's not horrible. Here, in this era right here, just in March, when we had that reel down to the market, breadth was just awful. It's back to that 50% and slightly above area, but it's been declining for quite some time, I believe, as capital's been pulled out of the market. The MOVE index, which is kind of the VIX for bonds, took a bit of an up on Friday, but wasn't dramatic. It was the VIX itself that really caused the move. You can see it. You can see the spike right there. Now, the way both the CFA program, if you will, and the CMT program and most financial programs teach it, is that the smart money is in bonds, and excuse me, the way they kind of phrase it is the not so smart money is in equities. I think what they really mean is that equities are more volatile and move more with the whims of short-term indicators than bonds do. So yeah, we got a bit of a rise in the MOVE index, but it wasn't like a dramatic rise, not nearly on the level of the VIX. Now, I want to zero in on the VIX just for a second. So if we go with 1 day, 1 minute, here's what happened. We came out of Thursday night on the VIX, and the VIX rose and dropped like this, and then for the rest of the day, the VIX simply, up, bull flag, up, bull flag, up. And it just did this, bull pullback, we'll call it. It's not really bull flag. Up, bull pullback, up, bull pullback. It did this all day long until finally it closed over that magic number of 20. And that's a big deal because it started the day all the way down here in the 16 area, just the high 15, low 16 area, and closed the day above 20. That's how fast the market went into, I don't want to call it a panic so much one day. It was definitely a point of concern. And it should be something that we need to be watching as we go. And so that is kind of the overview of what the market's doing right now. So from here on, we'll need to talk about some specific stocks that we're looking at here and a few strategies that we're coming up with. So let's get to it.
10 mil club.
Talking about individual stocks here, we're still, APG, I believe, was on our list last week. We like the look of that stock, especially with the volume dry up here and then the rise in volume as the stock kind of hits the bottom of this regression channel right here. Started to pay a bit of attention to the ADX, which the ADX is at is 25, which just something we've kind of started paying attention to is that an ADX of 25 is a reasonable type of strength as far as the direction of the trend is concerned, and the RSI has kind of pointed the right direction. So on our APG is actually on our radar here. Commercial metals company, we are long commercial metals company, and we raised the stop just before the show tonight. So the stop is now at 71.50. We should be able to see if things are going wrong at 71.50. That would give us a small profit. You can see that it failure swung, and this is, I'm sorry, if it came down from here, it would be a failure swing, and we actually have a 6-month downtrend. So not a 1 year downtrend. 1 year downtrend for CMC, I'm sorry, 1 year for CMC is an uptrend. We would hope that it would continue going up, but hope does not buy groceries. And so we raised the stop so that we would at least have a profit. We bought CVS this week. Now this wasn't on the show last week. And look, you need to know, stuff just disappears off of our list. This is a once a week show. We could probably do something every evening if anybody was actually wanting to watch that much, but at the moment we only have so many subscribers and only so many people even watching. And we're glad you're there. You know, please, if you're coming across this or you know anybody who's interested in this, please subscribe to our channel and like the video. If you're watching this, if you simply like the video, it helps us out a lot. Here we are. We bought CVS, and the reason is because the RSI actually is pointed the right direction. ADX is at 34, so the trend is still strong and in place. That's new. You've heard me mention that twice now on our show today, so we're kind of starting to watch that. You can see the dry up of volume here as the stock declines. That's a divergence. We have a dry up here, and then it begins to pick up. So we bought that, and to be perfectly honest with you, that is actually against my mental wiring. But it's what we're reading as far as good strategy is concerned, so we picked it up. At the moment, we're down a little less than 0.5%, but that's just, I mean, we've owned it for less than a day. EVC is, all right, for EVC, you have to look at 1 month, 1 hour. This stock was a penny stock, and then they reported earnings where they had been taking losses for a very long time. The market immediately priced the stock. Unless you just owned it and lucked out, you just didn't have the ability to get into it any faster than that. Who would have known? I mean, there just wasn't really a way to know. But EVC we bought during this week, and we paid $9.02 for it. It's now at $8.77, so we're down about 2.7%, and then Friday happened. We'll see what happens. We have, now, it's fun. If you look at this, it looks like it went down below our stop. It only did that. Let me go to 1 day, 1 hour, 1 day, 1 minute. It only did that with a very, very small number of shares and after hours. I don't think I'd put a whole lot of stock in that. No pun intended. Anyway, that's so our holding of EVC. We will see what happens. We're still following EXPD. We don't know exactly what to do with EXPD. We may buy into EXPD this week, and the reason is because you can see the rising volume here. RSI is generally pointed in the right direction if you squint your eyes just right. ADX, though, is at 14, which doesn't indicate a particularly strong trend, so I don't know. If you come back next week and you watch our show and we've taken it off, so it is. This stock, EZPW, which is Easy Corp Inc., we did not have on the show last week, but we came across it. They own a chain of stores called Easy Pawn, and they've been expanding. Mexico, a lot of places like that. And right now, there's actually another pawn shop stock that's out there too. I think it's called FC First Cash. First Cash is what it's called. I don't remember the ticker symbol, but we looked at it briefly this week in the group here. EZPW we bought, and at the moment we're up about 0.5%, so we'll see how that goes. But the ADX is in the 29 range, which we liked, and the RSI appears to generally be kind of pointing up a little bit. Just if I could for a second, we are working really hard to try to my contribution to the group here, I'm trying to work really hard to try to nail entries. I'm not as much the exit guy as I am the entry guy, so I'm working really, really hard to try to nail entries, and I'm really studying hard on that. So we're starting to put stops closer, and in this market especially, we're starting to put stops closer and try to pick entries a little bit better. We'll see how that goes. I know that that's an art form as much as it is a science, but anyway, bought Easy Pawn, crossed our line here, and we bought it. Let's go back to there. All right. Easy Pawn, crossed the line, we bought it. Ford Motor Company. This I also don't believe was on the show last week. So Ford Motor Company has turned into this interesting play on. It's down here in the news. If you get into it, it's become kind of a data center type of property. I read the article. I still don't totally understand it myself, but somehow it's become sort of a data center play, and I think it has to do with the fact that they have a lot of electric vehicle manufacturing capacity, and they are able to store lots of electricity somehow with that, and so that made the stock do this, and then it's kind of come back. Now, if you look at 1 month, 1 hour, we are kind of watching it here. It did cross below this trend line. We haven't bought it. But if that's the way it is, I mean, you can totally see this is something we watch here. If you look at the volume, the stock surges initially, and you have high volume. And then as it retraces, the volume dries up, or at least diverges. So that sell-off isn't so much a sell-off as it is a healthy pullback. And then suddenly up we go with higher volume, and then with the down days, we have lower volume, and then actually a pickup on Friday, despite the fact the stock closed down. So these are indicators to us of a stock being accumulated. And so a cross and a bit of upsurge, we may actually purchase Ford shares. The ADX is showing a 34, which is above that magic 20 level. That indicates that we at least have a strengthening trend. Relative strength is higher RSI is not pointed the right direction, but that's because of this piece right here. Probably not to be too terribly concerning. All right, let's talk. We got two stocks on here: FCX, which is Freeport, and sorry, I actually don't have the other one. There's another copper stock we were watching, but FCX is probably good enough. FCX is big into copper. Freeport McMoran mines a whole lot of stuff, or as Dave Keller calls it, Freeport McMoran, which may actually be correct. I don't know. But here's the thinking. If rate cuts are off the table and oil prices are going to remain high, then inflation is obviously still an issue. In an inflationary environment, you want to direct your money, or at least your attention, toward commodities. And if there ever was a company that produced input commodities, precious metals specifically, precious and industrial metals specifically, Freeport McMoran is it. So despite the fact that it got killed, we didn't own any, but despite the fact that it got killed on Friday, we're watching this because a turn and plenty of interest, and we could probably make Freeport McMoran work for us for a trade. So FCX we're watching. Fox we're still in. We're just kind of riding it. It doesn't have strong ADX. It doesn't. 18 is not a strong ADX. The RSI is at least pointed sideways, and the stock's kind of generally rising. We're up 3% on it. It's almost the kind of trade that we would do if we, didn't have anything else to do with our money. And to be honest with you, I'm gonna extend that to the right. And to be honest with you, it's a little tough to find things in this market that really have a good, strong, sustained uptrend. I mean, even when you pile into, semiconductors and AI tech and things like that, you find areas of just really high volatility that wash out. So at least we do. And admittedly, we're not the most experienced traders in the world, but it is nice to be up 3%. At times we're up a little more, at times we're up a little less. We're keeping an eye on it. So Fox, we are into. Gillette Satellite. We got stopped out of Gillette Satellite at 1605. It's now at 1452. Whether that's a turn for the worst or not, I don't know. Let's look at a month, 1 hour. I don't know if you do this. I'm on my third trend line, and GILT is simply not showing the uptrend. We got washed out, and we just kind of have sat since then, because if you're anything like me, you get stopped out and you have to sit down and just go, what was that? And it takes me a day or two to really kind of come back around. So we still have it on the list. It's of interest to us, but at the moment we haven't bought back in, but could at any point in time. We did, however, this week buy GSL. Global Ship Lease looked to us to be, now I liked the fundamental scan of this. I'm kind of the fundamental guy here. I'm not as much the technical guy in the group. I'm working on it. We're all working on all of it. But at the moment, my specialty is more fundamental than technical, despite all the work we're doing. But we do have an ADX of 19.6, which is not above 20, but does appear to be at least holding its own. RSI pointed the right direction. We may have bought this a little soon, but we're down a little less than just a touch less than 1% on it. So we'll see how that plays out for us. Still watching HCSG, haven't bought it lately, but it shows a lot of signs of, if we got a good turn, upward momentum. The only problem is the RSI isn't pointed the right direction, so we haven't bought it. IBM was kind of the big story of this week for us. We were glued to IBM. We bought into IBM. I believe this was on the show last week. We bought in at 259.32 and then just rode it. Now, just look, our exits aren't great yet. They say that the The hardest part is actually knowing when to sell. At one point, we were up 25% on IBM. And we have developed we didn't come up with them, but we have developed several indicators here in the group that flash green on our sheet when we're supposed to sell. I'm going to be perfectly honest, all 4 of them flashed green and we did not sell. And you're probably thinking why, but I mean seriously, let he who is without sin cast the first stone. Maybe we'll learn more in the future. We could have had 25%. As it is, we gained somewhere around 12.5%. We set our stop. We gave it a little bit more give than we are accustomed to giving, but we did finally get stopped out. Invesco, IVZ, we are looking at. We bought this week. We'll see where that one goes. We were seeing dry ups and higher volume on the highs. So IVZ, keep moving. MWA, we may be buying this. You do need to know that the ADX is in the 32 range, and the RSR kind of started pointing up. So MWA looks like one that might be a buy for us. It crossed our line. NAUFF, this is a situation where, all right, looking at 1 month, 1 hour, this is a situation where you get stopped out, it stings in the moment, and later, like a week later, you're happy because it's now at $1.76 and we got stopped out just a shade over $2. This one is the mining company that found out that they had about 56% antimony in the tailings of a gold mine or two in Nevada, and kind of surprised that that's down. Apparently the stock just ran up so much so fast. We're watching it here, and we'll keep it on the list to see if that situation reverses. We are all right. So PSQ and SH are short ETFs. PSQ is short QQQ, and it's tech heavy. SH is Standard & Poor's 500, but at the moment it's also very tech heavy. A lot of the breadth has only been in this small number of stocks. You can see the move up in the short, the PSQ and SH. If that accelerates, we may actually go short the market. We'll see what happens. I don't think one day makes a trend. However, we know that stocks have a tendency to, as they say, go up the escalator and out the window. And so we'll see how exactly that works. Triggering a bunch of stop losses. We have those on tap in case we need to quickly go short the market. We have not done that yet. SOXX is so you can see us get honestly, again, our sell rules are not the best. You can see it pick up the volatility up here on this day, and we were only up about 5.5% maybe. And I remember thinking maybe I should sell it. But look, hindsight bias is a powerful but awful thing. You can always look back after you know the past and think you should have known something. But I looked at it and I was like, this high with this extra volatility is higher than that high. And even though we don't aspire to be day traders here, we do aspire to keep our money. And so when we make it. And so we didn't sell it through here. We had an internal conversation. It wasn't something we just swept under the rug. We didn't sell it. Now we're here. We did not get stopped out. But following the beating everybody took, especially in this particular area on Friday, this is semiconductors, SOXX. It's intended to track the SOXX, which is the semiconductor index. This one, I believe, I've been told, trades 24/5, so it closes for much of 2 days over the weekend and then reopens on Sunday night, I believe. It closes sometime on Friday evening, I believe. I've been told 8 o'clock on Friday evening, and then reopens at 8 o'clock Sunday night. So it's now trading after hours and is recovering a bit after hours. We'll see what happens. Our stop is only down here at 527, and it's at 539. Good dive, and we're stopped out, having lost money again on SOXX. But, you know, I guess, what did we think? We bought into a really super crowded trade. It's kind of been labeled as the most crowded trade in the stock market. TMC, the metals company. We have to cover TMC, the metals company, because we are the 10 mil club, and people come and ask us about TMC, and so here we are. Took a dive on Friday, just like a lot of speculative things did. We don't really have an indicator that we should be buying TMC, the metals company. And like I said before, TMC, the metals company, there's just no way to value that. It doesn't have much in the way of revenue as of yet. In fact, all the revenue that it has is kind of speculative, because I don't think they have booked any revenue yet from the iron royalties that they bought, which I didn't even know they were looking into iron royalties. I thought that their whole intention was to mine, or to get a license to mine rare earth metals and critical minerals off of the Pacific Ocean floor about 1,800 miles southwest of San Diego, California. Did not realize that they were interested in iron royalties from iron mines in the Mesabi Range of Minnesota. Did not know that. But that, anyway, so they will be making some revenue soon, but as of yet, now let's just look at our indicators here. So the ADX is 22, which is over 20. RSI has not pointed the right direction lately, but that could change. And so, but we haven't had relative strength that beats the S&P 500, so there we are. Vera Bradley we got stopped out of a little while back and have not gotten back into. This is earnings right here. My concern, earnings is supposed to be on the 11th of June. My concern is if earnings turn out very, very good, Vera Bradley will spike really fast and we won't have time to do anything about it, a la this sort of move right here. But we'll have to make some sort of judgment call on that, and it will be either a brave or cowardly call. I don't know what we're really going to do. We bought Walmart. So Walmart, just pull up a year of Walmart here. My brother, Will, bought a bunch of Walmart. We owned a bunch of Walmart, and so we continue covering Walmart. And because we've continued covering it, we own some Walmart now. We bought some, we saw it turn. Let's just, all right, here's the year. Walmart came down and broke through the 50-day moving average, but then touched the 200-day moving average, turned, and we went like this. We went, okay, well, here's a month of it. Down, turn, over, and we bought it right there at 117.65. We're up a little bit, about a dollar roughly. So we'll see. I will say this: Walmart has a really great fundamental scan. Like when you stack up years against years and quarters against quarters, if you want a good-looking fundamental scan with shrinking share counts, handleable debt, coverage of interest, coverage of dividends, profitability increases, Walmart really looks great. It really kind of comes down to technically what the market's doing with the stock, and we just kind of picked that spot and went, you know what, we may get stopped out because it might come back up, might come down, it stops out, I don't know. But it seems like the 117 area was a good area to buy some Walmart, so we did. Finally, WTI, which is, we both bought and got stopped out of this in the same week. This is an offshore oil and gas company, and we just, there's 1 month winner. And so here we are, buying it at 408. I'm sorry, we didn't get stopped out. We actually, what we did is we pulled the plug on this. Here's 408. We saw the trade break down. I was staring at this most of the week, and for the couple of days that we owned it, and it failed to keep making higher highs and higher lows. You can see this move here and this move here. That's what we were going for. And all of a sudden the trade just broke down and we didn't have that. And so we had the presence of mind. It got right up here to $4.10. We had an internal conversation and we sold out of it. And so far we've been okay. Now, after hours though, I believe the shooting restarted in the Strait of Hormuz and talks are breaking down. And so the stock kind of powered back up again. But, anything can happen after hours. And that is what we think of it. Actually, before we go, if you might humor me just for a second. I'm going to go back over here. Two stocks, ETOR, real quick. I'm not going to touch on these. These came out of a scan that I was just recently working on. I don't know a lot about what these companies do, but I will report back next week. ETOR now has its 50-day moving average above its 200, its 21-day exponential moving average above those, and an ATR of 23, an RSI that's not really pointing the right direction, but a trend that might be coming into play here in this 38 area. So ETOR I will report on next week, and FLOC, which is very similar technical spot right here, and apparently hasn't been in business long enough to have enough of a 200-day moving average beyond that right there. So I will report on both of those next week. Don't even know what the companies do, but ETOR and FLOC. And that now is what we think of it. From all of us at the 10 Mil Club, to all of you who watched us all the way through this video, we thank you for being here. Please consider liking our video, and if you aren't already, subscribing to the channel. That helps us a lot. Thank you to Laura Sue Will and Mark Thomas in production and engineering, Sophie Hannah and Presley, the 10 Mil Club singers, and Jackson, our announcer. And from all of us, we will see you next time on the